Hey, business owner, are you using your vehicle for business? If you are probably entitled to a deduction for using your vehicle with the IRS. But one of the more common mistakes that we find people doing is deducting the amount of miles they drove and deducting their actual expenses. You see, when it comes time to get deductions for business use of your vehicle, you only have two choices. You're either going to get the actual expenses or you're going to get the standard mileage rate. For tax year 2024, the standard mileage rate was 67 cents. That means if you drove 1,000 miles, for that 1,000 miles, you get to deduct $670. Now, if your vehicle is used part for business and part for personal use, you are probably going to fall below the 50% threshold. That means that you have to take the standard mileage deduction. But even if you're taking the standard mileage deduction, you can still deduct your parking, you can still deduct your tolls, but you cannot deduct also the actual expenses. Let's quickly talk about what some of these actual expenses for business use of your vehicle may include. Your actual expenses, of course, would include gas, they would include oil changes, they would include new tires and other maintenance and repairs that you have performed. It would include vehicle registration, and it would include any other expenses included with operating your vehicle. But whether you do standard mileage or actual expenses, you are absolutely, positively going to have to keep track of how many miles you drove. A good way to keep track of these miles is to get your oil changed at least twice a year. So if you get your oil changed in the beginning of the year, you have your beginning odometer reading. If you get your oil changed at the end of the year, you also have your end of the year odometer reading. You'll now have to determine how many of these miles were driven for business. Now, these miles may be transporting children if you own a childcare business. It may be going to the store to pick up supplies. Maybe you're going to business meetings. Maybe you're going to business conferences. Maybe you're going to stake out the competition. Maybe you're scouting new locations for your business. Maybe you're even driving around back and forth to the airport before you get on a plane and go to another deductible business event, right? So it's important that you keep documentation. One of the best ways to do that is to use an app. One of the more popular apps that we suggest our clients use is called Mile IQ. This is not a commercial for Mile IQ. They are not paying me anything to endorse them. So you can also use any of the other apps on the market that work just as good. The way these apps work is you install it on your phone, you drive where you're going, and then later on your computer or your phone, you tell the app which trips were business and which trips were personal. Then the app will learn when you're doing a business commute and it will begin to log this. So when tax time comes, you have a written log of all of your business trips. If something was personal, you simply mark it personal. If you're ever audited by the IRS is going to want to see a written log with dates and the business purpose for these trips. So you don't want to get your deductions thrown out. And a way to best protect yourself is to keep this documentation, and it's simply mindless when it's installed on the app on your phone doing all the hard work for you. The IRS actually requires you to keep a written log of these business mileage expenses and deductions, so just in case you ever have to defend yourself. My name is Shanita Jones. I'm also known as the Childcare CVA. And if you've enjoyed this tip, like, tag, share with a friend, continue to follow, and I'll see you around. Bye for now.